We're going to be breaking down my version 3 portfolio. The simpler a strategy is, that is the only thing that correlates to future performance. It's stuff like profit factor, Sharpe, expectancy, all of these statistics, they don't hold any predictive value to the future. However, the one stat that I did find with predictive power was complexity. Hey guys, in this video, we're going to be breaking down my version 3 portfolio that I used from March 2025. Here, we got a really high level overview of it. So the main EA, in the end, the main V3 portfolio used 36 EAs. This was comprised of 7 NASDAQs, 11 XAU gold ones, 9 USD Japanese, 7 Japan 225 the Nikkei, and 2 DAX. Originally, there was about 50. This includes some GBP Jappy and it included a couple more on NASDAQ gold split across them. However, through time, as you manage your portfolio, you'll eventually kind of filter out some EAs that are kind of underperforming. Once you launch your system, the job is to just monitor them and kind of justify their position as a real strategy. You're not going to always have them all in. You should be actively looking to remove the ones that are performing badly and input new ones that are performing well. So it went from about 50 to 36 over the course of a year. The way that I had it set up, especially for prop firms, because you want as much diversification as possible, right? You don't just want to have, one portfolio, and if you have a bad week, you lose all of them. So I had it set up in multiple ways. I'd have some prop firm accounts that were running the entire portfolio. Then I'd have these sub portfolios, such as like the NASDAQ only. Then like another one like the NASDAQ and gold. NASDAQ and gold was honestly the best performing one. And then just have viewer EAs. So instead of the 36, I'll just choose 15 or 20 of them and kind of like 50% increase the risk per trade or double up the risk per trade, depending how aggressive I wanted to play on that account. Inside this portfolio, we also had some time frame diversification, such as the H1 and H4. What we didn't have was anything like the M15 or M5 or daily strategies in this. Now that you've got kind of a full overview, and I'll just make a comment quick on the DAX and the GBP JPY. Currencies aren't the best performing when it comes to the way that we build them. It's just kind of inherent that we're looking for a lot of breakout strategies. Currency is generally a more mean reversion when compared to, the stock market. So I did launch with a fair few GBP Jappy at the beginning, but I just didn't like the performance. It wasn't going the best and I removed them pretty quickly, and I haven't been too interested in rebuilding them. DAX, I don't want to say it's a similar situation, but I only launched with about 4 DAX. 2 of them survived by about 2 to 4 months in when I kind of rebalanced everything, and then they performed pretty well. If we actually take a look at the portfolio and the system itself, we can see here, I have all 36 of them loaded in here. You can see the Japans, we have some H4, H1, you can see the US tech, we have some H4, mostly H4, if not all actually, based on that. We have a lot of H1 USD Jappy, we have a lot of H4 and a little bit of H1 gold. So it was kind of a predominantly H4 biased system. With this, you can see that the average bars over here were about 8 to 16. These are H4 bars, obviously, if it's in a H4 strategy, H1 if it's in it. So we had a decent bit of diversification from, 12-hour holding time to like 2-day holding time. The one thing of note on this portfolio that I've adjusted in more my recent ones is this one was heavily H4 biased. I'm kind of going back to H1 bias and then trying to split it more like 50-50. This one was more like 80-20 H4, H1. I'm going back to 50-50. I'm also going to be including a small part of the portfolio to more scalping EAs, typically as low as M5, but mostly as low as M15. And when I'm building a scalping one, it's mostly going to be multi-time frame. So for example, the M15 is also going to be referencing the H1 when it comes to actually entering its trade. So if we actually have a look at the portfolio, I believe this is going to be risk adjusted. So it should be, let's have a check it out. Yeah, we can see here, not all of them are actually risk adjusted in this one. Apologies about that. But you can see the overall curve of the system. It's pretty damn good. The date that this was created was March 2025. So it should be right around here when it was created. Let's see if we got to March. We got April, so we just about missed it. But we can see this performance is after it was created. So this is kind of similar results that we got live. We did have the luxury of an absolutely incredible bull run during this time. I'm sure many of you would have traded through the gold bull run, which gave us amazing conditions for like 6+ months. It was very easy to pass prop firms. It was very easy to just make money during that time. A little bit more turbulent in 2025. But if we go on to the portfolio part, we can kind of have a look. It may be a little bit easier if we look at them one by one. So let's actually take a look at some of the performance. Take a look at some of the gold ones. Of course, the 2026 and 2025 bull run. It's going to be a phenomenal performance. We can see here in the out of sample bit, this is post development. So this is pure out of sample data, which we actually traded through live, which is fantastic. Gold is it's eventful, but uneventful just because of how easy it was to make money. And here's one of the NASDAQ ones that had a little bit of a worse performance in the tail end of 2025. And let's just check out a few of them going through. Again, a pretty similar story, a little bit on the end of the tail down on the end of that. Again there, another one there. We can see USD Jappy also treated me really nicely during 2025 and going into 2026. Japan, pretty damn nice story there. Another one. You kind of get the point. One of the things that we can see here is actually have a look at the source code and kind of give you a bit of insight into what these actually look like. We'll just look at the pseudo-code just because, it's going to be 10 times easier than reading the real code. The one thing that I build for is incredibly simple strats. I don't actually build for anything complicated because the one thing I found by testing is that the simpler a strategy is, that is the only thing that correlates to future performance. And what I mean by this is stuff like profit factor, Sharpe, expectancy, all of these statistics, they don't hold any predictive value to the future. So what does that mean? It means, okay, if something has a certain profit factor, it doesn't mean anything. It doesn't mean, okay, if it's got above a 1.5 profit factor, it's got like a 5% increased chance of working in the future. There's just no correlation. It's just a number. It's just a statistic. It doesn't hold any predictive power. However, the one stat that I did find with predictive power was complexity. In Strategy Quant X, it's just a very simple metric called complexity, which basically just tells you how simple or how complex the strategy is. And usually found around 12 or less actually holds predictive values to the future. It doesn't guarantee anything by any means, and it is only a relatively small predictive value, but any predictive value that you can add to your systems for future performance is a huge win. That's why you'll see some really simple stuff. You can see here, it's looking to enter when the CCI on the main chart, Woody's trend period is rising for 6 bars. So we're looking at a little bit of an uptrend for 6 bars on those indicators. Once that's been met, it is then going to open a pending order because these are all pending order based strategies. It opens a pending order at the highest on the main chart, which is the H1 in this case, plus price entry multiple times ATR on the main chart, ATR period. It's valid for 8 bars. The stop loss is the stop loss coefficient times ATR with a period of 197. Stop loss coefficient is up here. So this one actually has a pretty damn large stop loss, unless that's just because it's Japan. Japan honestly throws up some weird stuff. I usually use a trailing stop and you can see it as a profit target and then we can see the profit target coefficient. So it's using about double the stop loss, roughly speaking, to the take profit on this one. Super simple. It can also exit after bars, and I believe it is probably 24 or 48. Yeah, 48 bars. Take a look at another one. Let's take a look at a H4 NASDAQ one. That one's having a little bit of an issue. Let's take a look at this one. So here we can see, scroll down. It's looking to open the long, because again, these are all pending order strats. When it closes below the Bollinger Band on the main chart with these settings, when it does close below the Bollinger Band, it is going to look to opening a long order at the high on the main chart with the price entry multi times true range. It's valid for 6 bars. Again, you can see the stop loss. It's setting a profit target. It's actually using a VWAP. It's actually using an indicator to set the profit target instead of just ATR on this. And it's using the Bollinger Band range as well. So VWAP times the Bollinger Band range. It has a move stop loss to break even and it exits after bars. Same as before, we can see the move exit, move stop loss to break even and the stop loss coefficient here. And you can see all the indicator periods here. So that's a little bit of an insight, and all of these are super simple strategies. And that honestly is what works. I've never really launched or tried to launch systems that are overly complicated, because if an edge is overly complicated, especially from a data mining perspective, it needs like 4 indicators to enter. It needs like 4 indicators to exit. The more specific it is, the more likely it is to be hyper optimized or overfit or curve fit, whichever your preferred way to mention that is. So one of the things here is, what am I changing with the new iteration of this portfolio? This is V3. It's had really good performance. We are going to carry a lot of the EAs forward into the new portfolio, because when you do have a year plus of live data on EAs, you don't just want to get rid of them. That's 1 year of golden data. Just because they're older doesn't mean they're bad. So with the new portfolio, I'm going to be adding in a little bit more shorts. Predominantly, I have been long bias because we're trading indices mainly. I know gold isn't an indices, but I just mean it's got a very strong long bias. It just goes up most of the time. So we're trading things with extreme underlying longs. So if we make too many shorts, in my experience, it doesn't actually give us the best performance. In general, if you've got 6 months of good market conditions, you're probably going to lose a bit of money on the shorts, not really going to make it. The part where you do wish you had them though, is like this recent, March and February in 2026. This is where I did get a little bit stung by being a long only portfolio. I didn't have any shorts. So during these sell-offs, I wasn't really getting anything to counteract my drawdown. I was going into drawdown. Thankfully, with this second week of April, actually, we had the really nice, maybe even first week as well, had the really nice swing upwards on all of the indices. And I recovered 100% of my drawdown from March and February, plus a little bit of profit on top. But I think if I had some shorts in there during this time, just to kind of minimize that drawdown a little bit, not necessarily to make profit, but, if I can go from 4% drawdown in those 2 months to, 3 or 2%, that's a huge win. It would mean even more profit now we're into it. So that's one of the ways that I'm adding into it. I'm adding a bit of M5, M15 multi-time frame scalpers and M15 H1 scalpers. The reason for this was I set these up as a test during January 2026, and they were my best performing portfolio. Even during this super turbulent time, they made very, very good gains. Off the top of my head, it was about 8% over the past February and March. And I believe they're off to a really good start in April as well. Today, specifically, phenomenal performance. It just single-handedly passed one of my prop firm accounts on 0.4 risk per trade. Absolutely ate up the Monday open swing up that we've been on. So I'm going to add them to the portfolio. However, they're going to represent a bit of a smaller percentage of it. So let's just say, for example, simple numbers. I risked $500 on a swing trade / a normal trade. I'm going to risk about 25 to 30% of that on a scalping. So 500 on normal, I'm going to risk about $200 on a scalping trade. And the same will go for shorts. It will be about $200. In terms of other adjustments to the portfolio, there was a temporary portfolio that I've been testing, which was longer swing trading, which is in the mix. I've got that running. You can actually see it. I believe it's this one, just an SQX. Yeah, you can see it here. So this one has a lot higher average bars. They are on H1, so like 100 hours, like 4 days. So there's a lot of 4 or 5 days holding in this. I'm not against this, but I'm trying to use this as a test portfolio to justify its place in the real one. One of the other things that I've really done is ramp up additional markets testing. One of these will 100% have it, unless it's in this one. This one is the same one. Yeah, here we go. Perfect. You can see here some additional market testing. So it's one of the things that I've stepped up. I think this is it's a NASDAQ strategy. So I'm not just looking at, US 30 and similar related ones. I'm looking at such a wide margin. We have the Chilean index in here, the Swiss index, the Hong Kong, the Netherlands. I'm looking at literally every single index I can get my hand on, which from memory is about 20 of them, all across the world, and trying to gauge the performance on it. This takes it from like 1,000 trades to 40,000 trades maybe. If we have a look here, we should be able to see. So yeah, this one went from 700 trades to 14,000. So it 20x our sample size. And obviously I'm not building with the Hong Kong index like in my building environment. So that is an extra 14,000 trades worth of out of sample data because this is very much done after the build phase. So it's adding so much confluence, and I'm really have high expectations for how much this is going to improve how well the portfolio runs going forward. So I believe I'm going to be able to smash my 2025 performance with this. So that is pretty much all of the changes that I'm making to the portfolio. We have given this this V3 portfolio away to our community. It is still gold. Like it is, although it's 12 months old, it's a little bit old. It has a year plus of live data. That's such a gold mine. It can't be, all this data that you see in 2025 onwards, it can't be curve fit to. It literally wasn't even created at that point. So that is it. And there's some couple tips. If you want to drop a subscribe, I'm going to be doing a few more long form content, trying to dig deep and give a little bit more value and explain a bit more of the nitty gritty than I can do on short form content.